Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
For your real life and real future, Tom and Don are talking real money.
And it sounds like, once again, I'm going to need to write another piece with all the documentation, with all the research, so that I can offer it to people or put it in the magazine so that you can see that what they're telling you. They can tell you one thing, but it doesn't have to be true. Well, Donna, you're next. Welcome to the show.
Hey, Donna, how can we help you?
Oh, great. Thank you for taking my call.
Our pleasure.
So I have a company that I used to work for, a 401k plan, and I've been having them manage it. And I keep hearing you say that's a no-no. So I'm going to change that, but my question is, what funds do I put it in?
Okay, so have you moved on to a new employer?
Actually, no, I'm semi-retired.
Okay. So a no-no would be a strong word. For example, the federal government's TSP plan has very low costs, has decent diversification. The reason that we say generally moving it from a 401k into an IRA, for example, individual retirement account, you would have more options, you could have lower costs, and you have sort of freedom of choice that you may not have in a company retirement plan. So,
as long as you're very cautious about the firm you choose to work with on that rollover or that transfer.
If you were going to go do this on your own, we would probably say go to Vanguard. Go to Vanguard.com. You'd open an IRA, individual retirement account. Vanguard will very, very kindly help you move the money from your employer plan to Vanguard, to that IRA, and then manage it. Now, then you got to get into how much in the risky stock fund or the less risky bond fund. That's where it's harder for us to give you advice. We could give you the funds, but then you need to kind of decide, how much am I trying to make on this? How much volatility am I willing to accept? You said you're semi-retired, and how soon until you need this money?
Well, okay, so I also have the Vanguard Target Retirement Fund with some money that I earned from selling a home. So I've got that, and then when I look at my 401k options, I could roll those funds, just keep it in the same plan, but move it into a Vanguard Total Retirement.
Oh, so
account.
In the plan they have a Vanguard target date kind of fund, correct?
Yes, they have.
You know what? I
29
think,
options.
Yeah, I would think that would be okay. I think that would be fine.
Yeah, I don't know that I'd want to mess with it.
I wouldn't.
It sounds
mess
like
with
you
it.
actually had a decent plan.
Yeah, I mean the reason we say oftentimes it doesn't make sense because the plans are very expensive. The fund selection is poor. If you have a Vanguard target date fund, I'd leave it there. Get on with my life.
Okay, so then basically all of my money in my 401k and my other one is all in the Vanguard Target Retirement.
Remember, that's managed to your age, so in a way you get some protection because as we all get older, Vanguard's going to say you should be taking less risk because you may need the money at some point.
And it's not. Don't think of it as one thing.
Yeah,
it's a box that holds hundreds or thousands of things.
So it's not. I'm sounding like a little bit all your eggs in one basket. Not so much
you got a lot of eggs and it's a big basket.
Yeah, I think that'd be a fine choice.
Okay, excellent, great, thank you.
Thank you, Donna.
You're welcome. Thanks for calling.
Yeah.
And the information, well, one, it's free, and two, it's based on academic research. It's based on science.
You raised a great point because many of these decisions around who you're going to believe, who you're going to trust, who you're going to hire is because I know him. I know him because I got a relationship, always been a nice person. Before I hired anybody, because you raised the great question, how are you going to manage this money? What do you, the advisor, believe? What is that based on? Is that based on how you feel? Is it based on Mr. Rogers saying the market's going down? Where's the underlying philosophy here? Make that decision, then decide who you're going to hire.
And that is another reason why this form that I put together, I call it the Advisor Interview Form. It's at our website, Talking Real Money. Why it's so valuable, because it forces, it asks those important questions for you and asks your advisor to please fill in the blanks, explain what you're doing.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth, or the budding wealth, of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Reality radio for a really great future. We're talking real money.
Investing based on science. 877-397-5666 is the number. We would love to help you out every Saturday from noon to 2 Pacific time or 3 to 5 Eastern. Fill in the blanks in the middle. And Bob, you're next. Welcome to the show.
Hey, Bob.
Hey, good afternoon. Thanks for taking my call. I do have a question for you guys. I'm a listener, first-time caller. So taking your advice after listening to you over the years, I looked up a DFA fiduciary advisors in the area and connected with a couple of them, and actually have narrowed down my choice to one particular company.
Yeah. Mm-hmm.
And so my question is, I went through the interview process and I completely forgot about the advisor pledge form, so I'm going to have to go back and do.
Uh-oh, we just lost there? Bob. You still there, Bob? Okay, go ahead. Sorry. Yep.
Yeah.
Our bad.
So I didn't. That's okay. I did not use the pledge form, the advisory checklist. So, but went through the process, vetted them. I asked for references. Obviously, they probably gave me their best folks, but the persons that I spoke with seemed very genuine, actually very specific in what I asked them and the question they return responses. So I guess where I'm a little bit lost on this is that when we sat down and really started getting down to brass tacks, they spelled out their fee structure to me.
Yeah.
Basically showed me what I'd be charged. It was a tiered effect. It went up, obviously as my portfolio, the more money that I would be willing to give them. But the one thing that I was a little bit fuzzy on was that they explained to me that when I looked at where my funds are currently being held, so I'm in a 401k that's controlled by Fidelity, mm-hmm. And then I have like all rollovers right now into, and these are two of my bigger ones, into TRW. What they were trying to explain to me, what he was saying to me is that when I looked at their fees, for their managed, for the managed portfolio, that I was actually going to be saving money compared to the fees that I was the hidden fees I was not seeing in the funds I had, the mutual funds that I had in both these different, I guess, holding companies.
Yeah.
And in me calling them up, talking to T. Rowe and also talking to the folks at the Fidelity, which, it's a basket of funds, I couldn't get a clear read on that because, so I'm just going to shut up and let you guys ask.
Yeah, okay. Yeah, this is a very good point.
All right, let me just because there is a difference in what you were doing and what you're going to be doing. What you were doing before was buying mutual funds, probably through your company, and these are actively managed funds for the most part, I would guess, particularly with T. Rowe Price in there. So what you have to do is find the fund symbol, look it up at Morningstar, and it'll tell you what the fees are. Matter of fact, give me the name of one of the T. Rowe Price funds.
It's not you said a hidden fee. I mean, it's just not well advertised. That expense ratio is a part of every mutual fund you own. By the way,
give me the name of one of those T. Give me the name of one of those T. Rowe Price funds.
You're going to make me do this. Let's say the 500 index fund, I think it is.
Do they have a 500 index?
I didn't even know they did.
Maybe I didn't know they did. One. Maybe
No, they do.
They do. My head.
They do.
Okay.
Yep.
They do. Okay, now see, in that case, their expenses are 0.25. They're very low.
That's low.
Very low.
Right.
Very low.
And this gets back to, I mean, again, so if you're asking
what
us
do you
why,
get?
this is the bigger picture for me would be still the style. So Dimensional manages money far differently than an index, for example, or far differently than an actively managed fund at Fidelity. You as the investor have to decide, that makes sense to me, or I'd just rather have it in the T. Rowe S&P 500.
Right.
Here's let me switch this around a little bit, and I think that this might help. What were the fees that they quoted you to manage the amount of money that you have?
The DFA firm.
Right, the DFA firm.
Yep.
So what they did is they tier it.
Yep.
So the first 500,000 is at 1%.
Okay.
And then the 250. So 500, 750,000 is at like 75%.
Okay.
And then anything over $1 million is at 0.5. Okay. 0.5%.
Those are really good fees.
Yeah,
those fees are right in line of where they should be. What you are paying for now, though, you are actually paying for someone to hold your hand, to counsel you, to create this science-based portfolio, to regularly rebalance the portfolio. I don't think it was smart of this person to compare their fees with fees in a 401k, because you're very likely going to pay more in fees than you were paying in the 401k, but you're going to be getting a lot more and guidance that's almost invaluable.
Tom and Don are talking real money.
We hope you're enjoying one of the more unique podcasts out there, but we want to remind you that there are other tools we offer to help you get educated about what we call real investing. We publish Real Investing Journal both as a free online version and in an inexpensive printed magazine. You can check those out at realinvestingjournal.com. Then we offer classes, most of which are in the Seattle area, but now we've got a couple of the classes that we taught at Retire Meet online for free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com, click on the video link. And finally, we rarely mention it, but we also manage wealth for hundreds of folks and well over $250,000 through our fee-only 100% fiduciary investment advisory firm, Vestory. We manage money just as we talk about it. We always put our clients first. Our fees are low, and we educate you on a regular basis. Go to Vestory.com to learn more, and you can take our free no-obligation risk quiz to understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We're here to help Saturdays from noon to 2 on the West Coast or 3 to 5 on the East Coast. You're always invited to call us at 877
p.m. Central Time. I throw that in there.
4
Because you
p.m.
can never figure out Central Time.
It's easy. It's
Come
12 Pacific.
It never worked.
1
Okay.
Mountain.
That
2
was always the weird one. It's like, what? What is there,
Central.
one state on Mountain Time now or something? Nobody's on Mountain Time.
You know, and the one that's a problem is Arizona. What are you guys thinking?
Still on their own, whatever.
Actually, what they're thinking is they're probably smarter than the rest of us.
Daylight
we shouldn't be switching around.
Yeah. Daylight saving, no S, by the way.
I know.
Saving.
Daylight saving time. Get rid of it.
That's going to be the first piece of legislation I move for. Bang. That happens.
When? What happens?
I don't know.
Are you running for office?
This is yeah. I got about as much chance as you know.
I don't see that working out well for you. Well, although stranger things have happened.
That's true. That's a good point.
if that big head of orange hair can get in the office, that head of gray hair can get in. Who knows?
Careful now.
Great. Eric, you're up next. Welcome to Talking Real Money.
Hey, Eric.
How you doing?
Good. How can we help you today?
My 26-year-old daughter just got a pretty good job. She lives in Florida, which is, the cost of living is a lot lower than it is here in Seattle. She got a good job. She makes about $63,000 a year. And I'll give you guys a blank canvas on what she should do to ensure her retirement.
401k.
Yeah,
does she have one of those?
Does she have a company-sponsored plan?
Yeah, she has a company 401k, but what more can she do to help herself out?
Is she participating in it?
But
is she participating in the 401k first?
Yes, she is.
Okay. And are they providing a match of any kind?
Yes, they are, but I don't know what it is.
Okay. Well, we at least want her to save up to the match, if nothing else. Then the next part would be for her to do a Roth IRA. She could go to TD Ameritrade, open a Roth IRA online, take about 10 minutes, and then she could buy the ticker V as in Victory, T as in Tom, VT. That is a one-shot ETF that owns almost 8,000 companies globally. It's a really great product.
And you notice the hidden subliminal political message in that, what
VT.
Victory Tom.
Yeah,
Victory Tom. See,
okay.
he is planning to run for office.
Sorry. Shh, keep it on the DL. No, I mean, that's what I would do next. And then, I mean, I guess if you're looking bigger picture.
There's more.
Well, if you're the bigger picture, you have an emergency fund?
No, Eric. Do you ever give her presents for birthdays or Christmas?
Yeah.
Don't give her stuff. Put money in her Roth IRA. If she doesn't get up to the $5,500 at Christmas, put $500 into her Roth IRA. Better presents. This will mean something to her when she's old. Okay?
Okay.
You may not be there to enjoy it with her.
I love your show.
Thank you. That's very kind.
Thank you. Hey, we want to leave a legacy. We don't need to be there to appreciate it.
Good
Just
point.
the knowing that we helped our kids out. I think that's why we do it. Otherwise, they're kind of a pain in the neck. So there must be some good that comes of it.
Come on. I believe the adage, you get as much as you think you put
You
into
get
it.
what you pay
That's
for.
my take, but
All right.
could be wrong.
Well, they were teenagers, though I
that's
did
true.
want to sell them. I did. And I figured I could have gotten a good price for them. They were healthy. Pat, you're next. Welcome to Talking Real Money.
Hi, guys. You are just wonderful. Before I start, I just want to thank you for all your advice. I feel like I'm getting a very good education these years.
You're welcome. You're very welcome.
I have a question about Social Security. When I get my statement in the mail, it tells me, I'm 63 years old now. It tells me, retire now, retire 66, I think, and 70, the amount. But if I'm going to retire at 66, but not collect my Social Security, those figures that they're giving me assume I'm working up until I start collecting.
No.
How do I figure out if I'm going to quit at 66? How do I figure out what I'm going to get?
Okay,
at
first
70?
part one is they look at 35 years. So unless you're going to have a dramatic increase in the last 4 years, the change
Those numbers
is
aren't
going
to change.
Very nominal. I wouldn't worry about that.
Okay.
No, those numbers are actually real accurate, even if you do retire at 66, because they're figuring your full retirement benefit, and then they're just tacking on 8% per year.
They're just figuring the 8%. They're not figuring another 4 years at a higher. Oh, okay.
Nope. You're
No.
okay.
Okay.
Feel
All
better?
righty.
Nope.
Thank you very much.
Waiting
else?
means
What
you
else?
make out like a bandit.
And what else gives you an 8% a year raise?
I know.
What else, Don? What else gives you an 8% a year raise?
Paying off the 18% per year
what?
car loan.
You're missing it. All right, never mind.
Or Viagra.
Okay, there you go.
I know. That was the joke. By the way, we alluded to a joke early on.
I know, it was funny.
Tom was talking about Social Security at a class he was teaching, and he said, so what else gives you an 8% raise? And some guy in the back shouted, Viagra.
I thought it was funny.
He thought it was funny. He went home and told his wife, she goes, I sure hope it's more than an 8% raise.
I'm going to let you say that. All right, we got another call we got to go to. Tom.
Is it Tom?
It's Tom.
Tom, welcome to Talking Real Money.
How you doing?
Good. Thanks for the information, guys. I really appreciate that.
Yes. Go ahead.
You're welcome.
What's your question?
My question, I went to a seminar, and some guy was pushing fixed index annuities, and he said that it's the greatest thing in life, and sounds too good to be true. What do you guys have an opinion about that?
Okay, ready? You ready? It's too good to be true.
But it's not the greatest thing since sliced bread.
It's not. It's such a big fat lie. I've been to one of those classes. Now the invitations for them say no financial advisors, so I think technically it would be illegal for me to go, but I went to one. The pitch is very good. They show you charts of the stock market, and they say, look at this. It goes up, it goes down, it goes up, it goes down. You only get the up. You never get the down. They neglect to add a few facts. And this is where I can call them liars and get away with it without fear of lawsuits, because they are lying by omission. They neglect to tell you that there's a cap, that you can only make up to a certain percentage of the market's return. They neglect to tell you that the stock market also includes dividends. About 2% of the total return every year is dividends.
Yeah,
you don't get those.
Yeah, good point.
The average annual return for these equity indexed annuities, and this is not my number, look it up online, it is somewhere between 3 and 4% per year. Does that sound like the return of the stock market with no risk?
No.
It's a lie, but it's a good lie. It's such a good lie.
It's very appealing.
Because billions of dollars every year put into these things. It's very appealing. And what's so great about it, the reason these lies persist and are so common is because it is so lucrative for the people selling it. The commissions on these things range on average between 7 and 10%. So you give them $100,000, you're losing instantly $7,000 to $10,000. And they'll say, no, you don't pay a commission. The company pays me.
Yeah.
You want to know what the commission is? Look at the surrender charge. Whatever the first year surrender charge is, that's the commission collected by the company selling the products. These people do not tell the truth. They are as opaque as they can be. They ought to be driven out of business. The government even tried once and they failed.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And if you don't have the job you want that you need to contribute to your Roth, and you're interested in the investing business, you'd like to get started in this business, or you've got some experience in this business, and you're looking for a firm that's actually going to tell people the truth, you'll have to work for a living. I'm sorry, that's part of the deal, but we're looking for client services people at Vestory because Vestory is growing. Just go to Vestory.com, and it's right there at the bottom of the page. Go to Vestory.com, Vestory.